Welcome to Module 2A, Filing Status. By the end of this module, you will understand how to select the appropriate filing status and understand how filing status and dependents affect the tax return. This module is divided into 5 sections: filing status, determining filing status, the impact of it, recap, and we'll end with a knowledge check. So let's talk about filing status. Each tax return must indicate one of 5 filing statuses for the tax filer or filers: single, head of household, married filing joint, married filing separately, and qualifying widow or widower. The filing status determines the amount of the standard deduction as well as other aspects of the tax return. For tax year 2019 returns, the standard deduction for each filing status is as follows: single, $12,200, married filing joint, and qualifying widow or widower, $24,400, married filing separately, $12,200, head of household, $18,350. Note: refer to Module 5, Deductions, to learn more on how the standard deduction impacts the tax return. So let's talk about determining filing status. The taxpayer may file as single if they are unmarried on the last day of the calendar year. Unmarried means 1. Never been married, divorced, legally separated, or widowed. For example, Scott's divorce was finalized on December 30th, 2019, and he has no dependents. What would his filing status be for tax year 2019? The answer is single, because he was considered divorced on the last day of the calendar year. Another example is if Scott's divorce was finalized on January 1st, 2020, and he has no dependents. What would his filing status be for tax year 2019? The answer: Scott's filing status is married filing joint or married filing separately, depending on what he and his ex-spouse decide, because he was still legally married at the end of the tax year. A taxpayer may file as head of household if on the last day of the calendar year they are 1. Unmarried or considered unmarried, and provided more than half of the cost of maintaining the household for themselves and a qualifying person. Taxpayers must meet all 3 tests to elect the head of household filing status: marital status, housing, and qualifying person. Generally speaking, this is someone who's not married, paying the bills, and taking care of another person. Here are the head of household qualifications. On the last day of the year, a taxpayer is unmarried, legally separated under a separate maintenance decree, or divorced under a final decree on or before December 31st. A married taxpayer can only claim head of household if 1. They did not live with their spouse the last 6 months of the year, and they meet the other 2 criteria and the qualifying person is the taxpayer's dependent child. For housing, they must have paid the cost of keeping up a home for the year. That includes home expenses such as rent, fair market value rental on the home, repairs, utilities, and groceries. And finally, they must meet the qualifying person test. The qualifying person must have lived in the taxpayer's home for more than half the year, at least 183 days. A dependent parent does not have to reside with the taxpayer. Here are 2 examples of head of household. For example, Jeremy is divorced and paid 100% of the cost of keeping up his home for the year. His son lives with him and he is the primary caregiver for his son. What is his filing status? The answer: head of household, because he meets all of the requirements necessary. In the next example, Jeremy is divorced and paid for 100% of the cost of keeping up his home for the year. His son lived in the house for 3 months in the summer. What is his filing status? The answer is single, because he does not meet the head of household requirements because his son did not live with him for more than half the year. Let's talk about the married filing jointly qualifications. If two taxpayers are married, they can choose to file a joint return. If one of the spouses died during the tax year, the widow or widower can still file a joint return for that year. It is possible for someone whose spouse passes away after the calendar year to also file a joint return for the tax year. A married couple can also choose to file a separate return, which can be beneficial if it results in less taxes owed. For most taxpayers, this is not an advantageous filing status, since married filing separately filers are excluded from claiming a lot of credits, including the earned income tax credit. There are special rules pertaining to married couples who choose to file separate returns. They have a higher tax rate than married filing jointly. They have no credit for child independent care expenses. The maximum exclusion for an employer's dependent care assistance program is $2,500. They have no earned income tax credit, no exclusion or credit for adoption expenses, no education credit, no student loan interest deduction, no exclusion for interest income from qualified U.S. savings bonds used in higher education expenses. Generally, the law encourages married people to file a joint return. Qualifying widow or widower with dependent child. For the 2 years after the spouse has died, a widow or widower with children may use this filing status. For qualifications, they are entitled to file a joint return for the year that the spouse died. It doesn't matter whether a joint return was actually filed. For the tax year 2019, the spouse must have died in 2017 or 2018, and the widow or widower did not remarry at the end of 2019. A taxpayer has a child or stepchild that lived with the taxpayer and can be claimed as a dependent or could claim as a dependent except for 2018, which the taxpayer had a gross income of $4,200 or more, the child filed a joint return, or the widow or widower could be claimed as a dependent on someone else's return. In addition, the final qualification is that the widow or widower paid more than half the cost of keeping up a home for the year. So let's talk about the impact on the tax return. Filing statuses can impact a return in different ways. For example, if you're filing single, you can impact your tax bracket. Filing head of household offers a different tax bracket and a higher standard deduction than single filing status. Married filing joint allows for both spouses to report their combined income and take a larger standard deduction in order to potentially lower their total tax due. Married filing separately, each spouse can file separately, but that puts them in a different and generally higher tax bracket than married filing joint or simply filing single. It also disqualifies the taxpayer for several tax credits. Qualifying widow or widower with dependent child can use this filing status that offers the married filing joint tax bracket and that standard deduction. So let's recap. There are 5 filing statuses: single, head of household, married filing jointly, married filing separate, qualifying widow or widower with dependent child. Taxpayers must indicate one filing status on the return. Filing status depends on marital status, dependents that can be claimed by the taxpayer, and the taxpayer's living situation. Filing status also impacts many aspects of the return, including tax bracket, standard deduction, and eligibility for other credits. So, time for some scenarios. Jeremy is unmarried and paid 100% of the cost for keeping up his home for the year. He can claim his father as a qualifying dependent parent, but his father doesn't live in Jeremy's house. Jeremy also paid for over half the cost of keeping up his father's home. What is his filing status? The answer is head of household, as he meets all of the requirements. Number 2, Jeremy is divorced and paid for 100% of the cost of keeping up his home for the year. His son is 40 years old and makes $40,000 a year and still lives with Jeremy. What is Jeremy's filing status? The answer is single, as his son does not qualify as a dependent because he is 40 years old and earning over the gross income limit. Number 3, Joseph and Lauren were married on October 31st, 2019. What is their filing status when filing taxes for the tax year 2019? The answer is married filing jointly or married filing separately, since they were married before the end of the calendar year in 2019. Judy and Eric were married on January 1st, 2019. What is their filing status when filing for tax year 2018 or for 2019? They are both considered single for 2018 because they were not married on or before the end of the 2018 calendar year. For tax year 2019, they can file either married filing joint or married filing separately. So here are some additional resources talking about filing statuses, what is a dependent, how to determine filing status, cost of keeping up a home, and publication 4012. Up next, Module 2B, Dependents.